Good evening and welcome to the Accendo Traders Group. This is our video trade plan for Thursday, June 12, 2008. AccendoTrader.com, effective trade plans delivered daily. Each night we go through our routine. If you're new, go ahead and pause it here. We go through our routine to make sure we're aware of any market moving news, events coming down that can affect our trades, so we can adjust our alerts, and as we're scanning for new trades, we can make sure we're in the right positions. And as always, we want to make sure that we have time to spend with our families. Today in the market, we start off with the oil rallying off of the crude inventory, which showed that the stockpiles fell by a larger than expected amount. Financials continue to be under pressure. There was an analyst that came on CNBC that said that she thinks that the losses on the banks from loans have the potential to be greater than the losses from the collateralized debt obligations, the CDOs, in the first quarter. So more pressure on the financial sector, which we know is going to pull the S&P down. Inflation concerns about a further rate hike. The Fed Beige Book did not provide any surprises. It said that the market was weak, the economy was weak, and it talked about evidence of increased inflation. So this idea that we're over, and most people knew that the Fed is over cutting rates, but now the thought of when we're going to raise the rate is actually looking to be sooner rather than later. 9 out of the 10 sectors in a negative territory. I wonder which one finished in positive. I think we can all figure that out. And you can see certainly now we have some big numbers here down 200. So we certainly had a significant move down lower. Nothing on the earnings front. We had a couple upgrades and downgrades. Nothing significant. And tomorrow we have import, initial claims, some retail sales, business inventories. Nothing on the earnings front, and we still have our split plays. So let's take a look at our flag list. Okay, well, here it is. We talked about, it wasn't necessarily what we thought. We thought maybe the Fed Beige Book would send us down, but it was really some of the talk about the financial concerns and, of course, oil rallying, and so the market fell on that. And you can see as we zoom in here that has now pushed the NASDAQ below the 50, and certainly we need to consider more bearish trades on that. Then we take the Dow, which set up a falling 3 pattern, and it's now firmly in the downtrend. I mean, we are in the downtrend from October. That's what this line is right here. So we got a nice falling 4 pattern there, falling 3 pattern, and we're right into that. The S&P 500 also today, once again, backed into that downtrend line from October. So, there's no other way to take that but to say the market is weak. Now, could we get a bounce? Like, again, we had a big down here, so we got a test for a couple of days. Same thing with the Dow. We tested for a couple of days. Even with the NASDAQ, we pushed down and we tested. So certainly if the market bounces tomorrow, that doesn't mean, ooh, we're back to bullish. It just means that, we're going to test after this big push down. And again, what's going to be our catalyst? We don't have a lot going on. So we need news like financial banks are going to lose more money. We need big news like that to really push us one way or the other. So with that being said, yes, the charts are telling us to look at more bearish trades, so we will do that. Go ahead and take a look and see what we did. But for the most part, we're still looking at our trending stocks. Look at A&R, still looking good. ATI, we did get our entry, but now we moved a little bit too far for a safe entry tomorrow. If you're in it, tighten your stops. BNI is the one that's really the shocker. That's one really took a hit. Now, I would be considering this one for a put play below the 50, but that's a huge move. So for right now, I'm going to unflag it, but reserve the right to bring it back. BTU, coal, I'm going to keep it right now. I'm going to look at a couple other ones, but for right now, I'm going to keep it because it's still holding up here at $80. CAT, we got our breakout, good volume, but again, for safe entry tomorrow, I don't think so, but we may... if you're in it, tighten your stop, because look, where did it bounce? It bounced at the gap down range. Actually, I'm sorry, gap up. So it bounced right there. So, there is some potential if it breaks that 7850, but for right now, I'm going to unflag it. CLF, we said play this below the 20. We got our entry. We've got, what is that? It's 95 down to 91. And 89, so we got some room to go with this one, so I'm keeping that one flagged. Dry shipping, very nice continuation of this move. Again, there is some support in this $72 range, but we think we're going to 70. But I unflagged it. Goldman Sachs, that's a classic falling 3 pattern right there. Broke support, so definitely want to play this one. MON, not the best looking agriculture stock, so I'm going to unflag it. MOS, the best looking agriculture stock, but it's gapped up, so I have it unflagged. We'll look at POT to see if we got anything there. MT's looking nice, big push down. We said if it breaks to 20, we got that confirmation. You're going to have to determine your risk level if you want to mess with this 95 down to 93. I'm probably going to unflag it for right now. Reserve the right to bring it back. NOV, nothing going on there. PBR showing some weakness at the 50, so we're still trying to play this break of the 50 to the downside. PCX still holding up. We're trying to play the break out above 140. RIG also sitting here at support, so we're still going to play that. Oil is rallying, but RIG isn't. Here's SWN, also sort of a breakout wedge play here, so we want to play this above $49. UMP, weak. WFT, as much as I like the chart, I'm flagging it for right now. And finally, X, showing some weakness, break of the 20. We may be time to look to play this to the downside. Education portion of our video. And we're using the book Trading in the Zone by Mark Douglas. We're on chapter 3, Taking Responsibility, Shaping Your Mental Environment. And yesterday, we ended with talking about that the best traders think in a number of unique ways. They have acquired the mental structure that allows them to trade without fear and at the same time keeps them from becoming reckless and committing fear-based errors. And, it is a little bit more the same that what separates good traders and bad traders is it's almost confidence. I mean, saw the results of the Lakers-Celtics game last night, and I saw that Ray Allen was the leading scorer for the Celtics. And anybody who's been watching basketball over the past playoffs here know that Ray Allen has been stinking it up. But what he's always been saying is that I just gotta keep shooting, and that's what they say in basketball. That's what they say about baseball. You got to keep swinging, you got to keep shooting, and get yourself out of the slump. It's all about confidence. And when someone loses their confidence, they their stats go down. And trading is the same way. When you don't have the confidence to click the trigger and execute a trade, you begin to make bad decisions. You begin to, as he goes down here and says, you're no longer making fear-based errors that come from rationalizing, subconsciously distorting information, hesitating, jumping the gun, or hoping. When you don't have the confidence to say, this is my trade, boom, I'm not going to say nothing good can come from that, but I am going to say that your ability to make the best effective decisions for your money and for your system, it's just not there. You've got to have the confidence. You have to have the ability to not be fearful of the result. You have to be able to accept the result, and you have to be able to actually click the mouse. You got to be able to make the phone call and say, this is my trade. This is what my system told me my trade is. I see it. I'm going to execute it, and I'm going to deal with the results. Without that confidence, your stats will go down. You'll start making errors, and you'll start blaming the system. You'll start blaming others, but you won't take responsibility. So we have to have confidence to be in this market. We have to recognize for what it is, and we have to develop the mental structure, the internal discipline to be successful in the market. It's an acquired skill, and hopefully we are taking all of us down that path to acquiring that skill. To get the full version, there's the podcast link. There's the link to provide us feedback. And as always, go check out the blog. I've been talking about starting a dialogue, and a couple people have responded to that. But you're responding emails to me, so everybody doesn't get to see that, although I might start sharing some of those on the weekend report. But let's get that dialogue going. Please share, comment, and let's see what we can do together as we continue to grow our trade plans, grow our systems, and more importantly, grow our portfolios. See you guys tomorrow.